and review some of the trading we've done today over the past week. And yeah, I just take a look at general stuff that's going on in the market. And today is kind of a fun day because we have the almighty Bitcoin conference. Now, we put out some analysis just the other day. Well, I think it was yesterday actually, which basically states my partner, Nick, he has a theory that Bitcoin, or he had a theory, he felt that during these conferences that the price would pretty much always dump. And, it kicked off today. I think, Bitcoin conference kicked off today and we saw a dump ensue pretty much straight off the bat. As we can see, we're looking at the price here. And, you've got the start to the day and it just pretty much America's online here. Maybe not yet, but, it's starting to go down. So yeah, it's a bit of a shame that a lot of these big events and stuff like that. I think the most significant one that sticks in my mind is Bitcoin Day, or when El Salvador made Bitcoin legal tender, and the price just absolutely plummeted. It's always the case. I mean, it's the whole kind of ideology of buy the rumors, sell the news. And realistically, this is no different. I mean, if it was that easy, then we'd all be millionaires, but sadly not. However, let's take a recap on some of the trading we've done today. As it goes, I'm actually quite nicely up today of around about 12% on total balance. So I'm probably not going to be taking any more trades today, as that's kind of went a bit better than I'd expected. So these are the trades we took today. I didn't get in on this trade just here. So my trading day starts around about 8 a.m. here. Whoops. About 8 a.m. So this is where my trading day will start. And that's where I got in. So I pretty much go in here and then, literally opening up the laptop, etc., looking at it. And by the time I saw this, the price had kind of declined a little bit more. So I didn't actually open a trade just yet. I know it could have been a nice place to get in, but by the time I kind of came back to it, it already broken through stop loss. So I didn't actually get in on this trade here. The first trade that I did get in was this trade just here, which was a win, and that was a nice one. So as you can see, that was just the positions box I had in there. I didn't necessarily actually have too much of a better position, so only slightly better entry, nothing too crazy. But as you can see, I just followed the indicator, stop loss, and take profit targets, which worked out pretty okay for me. And at the moment, I'm using the conservative signal set on the indicator. So if we head on down here, you can see that you can have high frequency or conservative. I quite like to use high frequency for higher time frames. It's really good for, spot signals where you're only able to trade in one direction. So this gives you a little bit more frequency to them. As it happens, the actual frequency of the the actual win rate of the signals is really similar, to be honest. So it's not a case of having one versus the other will naturally actually make you more money. It's more of kind of like a time consideration thing. Like if you're scalping and you're getting throughout the course of the day, you're taking 1, 2, 3, 4, and the day's kind of only half done. So maybe up to 7 or 8 in a trading session, and that's on conservative. Then depending on how the market is, then it can get a little bit excessive. And as we've seen in previous live streams, it gets really frantic. You're stacking 3, 4 trades, and in a ranging period, it can really hurt you. And that was one of the things that hurt me last time a lot, and lost a lot more than I had wanted. Now, the reality is, if you're trading, I'm trading these balances with 10% on my total allocation because I'm using a small allocation here, and this is a lot for kind of showing you guys how I do scalping and live trading. It's not to say you can't use 10%. I mean, it's completely fine, providing your strategy doesn't have too many consistent losers in a row, which ultimately this kind of because of how the range fell and because of the amount of stacking of trades in one direction, and just honestly a bit of unluckiness from from Bitcoin and the wicks, it caused near that kind of thing. Well, maybe not near that, maybe about 60, 70% kind of thing, because it was 6 or 7 trades back to back But straight after that, if I'd have carried on trading throughout the day, I would have made the majority of that back. However, that's not how it always falls. You can't trade 24/7. You have your allocated trading times that you're trading in, so you just kind of have to suck it up. So if you have a really bad session, worse than usual, let's say, then it's, you can end up ending that day in a pretty bad loss because you don't get an opportunity to recoup those trades later on in the day. And this often occurs when, like I said many times before, when you're in a ranging or consolidating period, it is really awful trading conditions because that's when wicks go up and get rejected, wicks go down and get rejected. But almost every single time they're hitting your stop losses. And yeah, unfortunately, it's just the nature of the beast. So until you kind of get a defined trend, then it can harm you. So in order to combat that, I basically added in conservative signals to this indicator, which basically means it's just taking the first signal of a new direction. So it's not doing anything particularly different. It's just ignoring the following signals within that one trend direction. So to give you an actual landscape of what it looks like, if we were to turn on the high frequency ones, I can't guarantee a load will pop up, but some may. Okay, yeah, some did. So here, for instance, this would have been a really, this would have been a conservative signal. That's a conservative signal. That's a conservative. In fact, pretty much everything aside from this one here and this one here are all conservative conservative signals. So as you can see, it's like basically the first signal of a new direction where the conservative ones focus on. Now, like I said, there are benefits and negatives to both of them. The benefits are that, let's say, in this case, we would have lost 2. And in this case, we could potentially have won 2 if it goes back down, kind of thing. So it has its swings and roundabouts, but for the most part, you don't stand to make any more or less money. It's just if you like to have a high frequency of trading, which in the higher time frames is actually quite a good thing because you're not always around to catch those signals. So it's kind of quite good to actually be in them. So here, for instance, this would have been a fantastic, amazing run for the higher frequency, an amazing argument. I'm just going to take a small carved out section just here. So let's say, for instance, we'd have started trading just around about here and ended up, let's just push that a little bit further forwards so we can get that trade in, and stop trading, let's say around about here, the ideal scenario, mainly because I'm looking at it, looking back at it here, that would have been much easier to do. So we would have gotten here with a conservative signal, that would have been a win, great, but however, we would have got into another signal here with the high frequency, and that would have been a win, and equally as well, we would have got into a winning signal here, and then another winning signal here, and then it would have been a losing signal with the conservative, winning signal there. So with the high frequency in this scenario, we'd have actually been considerably better off. But then, lo and behold, as we kind of move a little bit further down, we do get clumped into signals like this where we've taken a necessary second signal just there, and the price reverts. So this would have been, let's say, instead of a minus 10%, this would have been minus 20%. So like I said, it kind of is a little bit down to personal preference, but honestly, where I'm at the moment is I'm not the biggest fan. I really don't like stacking trades too much. So the conservative one, I'm not saying it doesn't happen at all. In fact, it actually happened today, but it'll only happen like with stacking maybe 2 signals at a time. So you don't have to, you don't have to be too worried, because once you start stacking up like 3-4 signals on top of each other, then you start to get a little bit nervous that if the trade does turn, then that's going to really hurt you. But then again, it is relative to how much is your risk per trade. So if you're risking 0.25% and you got 4 stacked, it's 1%, sucks, but it's not the end of the world. If you're risking 10% per trade and you got 4 stacked, that's 40%. That's almost half your balance if it goes the wrong way. So, big risk, big reward. It is what it is. So yeah, I took 3 signals today in actual live trading. And then this is the past 7-day earnings so far, which is actually going okay. Obviously, I'm kind of like on a bit of a road to recovery after a horrendous one horrendous day trading, which just everything went wrong. But we're comfortably back on the road to recovery. You know, we're in the green again. And then this has just been the past week. I've been pretty light on trading, to be quite honest. But you don't need to trade like aggressively in order to make a lot of money, to be honest. You've just got to know what your limits are for the day. So my limits are 10 to 20%, which is a lot. You know, it's a huge amount. So I'm super happy with 1%. But with the nature of how I'm trading using the size of risk that I am, that's essentially being like kind of one trade in the green. So as soon as I get 1 or 2 trades in the green, then I am tools down. I'm happy for the day. And, you know, you do that 5 days a week, that's 50%. You know, you do that 4 times a week, that's 200%. You know, can you do 200% a month? Yeah, for sure. But, you know, at the same time, just be a little bit mindful of what is your allocation. Let's say you've got a $10,000 allocation or $10,000 balance, then I'd probably recommend saying no more than 10% of that into a kind of high risk strategy like this. And then you can use 10% of that. So ultimately you're trading with 1% of your balance, but you can turn that 1% of your balance into $2,000 a month. If you're trading consistently well, with an amazing strategy like block party indicator, it is very, very achievable. You may have losing days for sure, as you know I have proven, but I think all in all I've had 2 losing days. One of those was a bad losing day, but I've had 2 losing days pretty much since starting all of these live streams, which is a good kind of over a month ago. And I'm not doing anything particularly crazy. You know, you can see that I've got a little bit of analysis going on, but nothing major. I think, in fact, actually, the more input and analysis I've done has been more harmful than good. I've not been trading particularly well. It's very hard to trade as you would when you're on a live stream versus when you're not on a live stream, because when you're just focusing on trading versus being on a live stream and talking, you know, your mind is elsewhere. You do miss things. You're trying to look at the camera, wait from when you can. So it's not the ideal scenario for trading, which is why I only do it once a week now. You know, I focus the rest of the time on actual trading. I think it'll bring a lot more value to be able to turn around and show you amazing results over the course of a week, analyze them and do a bit of live trading here and there. But yeah, like I said, it's not a, you know, it's not kind of a easy thing. It is, there's no fixed answer or solution to trading. It's such a evolving beast, and you've kind of got to evolve with it. And this is the longest strategy I've had kind of working consistently, I think pretty much ever. You know, I've been using this behind closed doors for probably better part of 6, 7, maybe 8 months kind of thing. And it's been doing extremely well, which is why we released it and made it available to everyone. And yeah, I think you guys should give it a go. It's got a 7-day free trial. Why not? You can go on TradingView. You can use the paper trading, you know, sharpen your teeth like that. And, you know, another great thing as well today. If you have a little look across the top of the banner, we've got a whole new price point in. Obviously, Bitcoin's still not kind of where we want it to be just yet. It's not above 30K where we really want it to be, because that's when I feel, or we feel, or we know certainly from past, that above 30K is where excitement really comes back into the market. It's where projects really start to release new upgrades and spend a lot on marketing and bring a lot of people back into the market. And naturally, that just organically pumps the market price and all the prices as well. And 30K is kind of like that threshold where we see it. You know, $30,000 Bitcoin is that, it was a long time ago, that absolute stratospheric target, and now that is where we kind of expect it to be. Probably at the lower end of where we expect it to be, if I'm being honest. But I think, you know, once we start to climb back above 30K, excitement will come back into the market. Do I feel like we're going to be going there or 25K first? Well, we did actually touch 25,800 not so long ago, a few days ago, last weekend actually. And yeah, that was a bit of a scary time, but we did pump nicely. However, I wasn't totally convinced that was the reversal or the bounce. I do kind of have a lot of conviction towards 25, sub 25 kind of thing. Not too much, but sub 25. And we'll take a look at the Bitcoin chart in a second. once we've had a little look at these trades. So again, like I said, these are the 3 trades I've taken today. That's all. 1 trade at 8.45, 1 trade at 11.36, and then 1 trade at 12.21. These 3 trades, 1 was a loser, 2 were winners. That's a 66% win rate. I risked 10% on all of these trades, and after all said and done, I am 10% up on my entire account, or entire balance in that. Simple as that, really. I'm not doing anything special here. I'm just taking these trades. The actual targets are literally on there for you to follow. We're now actually forwarding the scalping BTC signals into our premium signals. So if you are a premium member, you don't necessarily need the indicator, but you do need access to the premium channel, so you can follow along with them. Very easy to follow. Said it many times before, guys, but it's so important to choose an exchange that has really, really, really fucking low fees. Why? Because once your fees get anything above 0.06%, it's going to completely wipe out any chance of you being successful at scalping. When I'm talking about scalping, it's generally around about 0.5% targets. Almost 25% of that is going to have gone on fees straight away. No matter what happens, win or lose, you're going to lose 25% on fees. So I didn't actually think MEXC could get any better. Check on our website. We've got affiliate links there, which can help you out. But right now, the fee level is a maker is 0.0%, straight free. So if you're doing a limit order, you're not paying anything. Now, I didn't actually think it could get any better, but just recently they even lowered the taker. So taker, for those you don't know, is a market order. So those kind of people who like to go in there and just click buy, sell, which is fine, but you need a really, really low kind of fee level in order to do that successfully. They've lowered it from 0.02 to 0.01%. Which means you can pretty much fat finger in and out of deals super easy. You can just buy, sell, market order to your delight. It's really going to have zero effect. In fact, actually, I did a bit of a test earlier to see what kind of impact it would have on some of the trades. And for a closing P&L of this, bearing in mind, was like 0.7%, maybe 0.5%-ish region TP. And the trading fee on that one for using a market exit. I did limit order in, I'm not gonna lie, I can't help but limit order in. But I limited out, and that was a 0.5 of $21 profit. So yeah, the funding fees were actually positive, which is pretty cool. But yeah, so it just is so nothing. Like I said, if you can, always limit in, limit out, because then it will actually be totally free. And I would have made an extra 50 cents, which, to be quite honest, is actually quite a lot. Divided by 100. To be fair, yeah. I mean, it's still 0.5% on the entire day, which, in most circumstances, 0.5% per day is incredible. So I've just lost that on fees. So again, another word of warning, just make sure you limit in, limit out. Don't get too trigger happy with the market orders. But anything past 0.5%, it really doesn't matter. It's going to be so small. You can start to live it up a bit. There are a few things that I want to talk to you today about. And one is talking about meme coins. So we have wanted to take a look at Milady meme coin because it's not something that we like to spend too much time on, for sure. And we just actually put this analysis out. There's going to be a more kind of bulkier analysis video on this, so I won't spend a huge amount of time on it. But this will be coming out after this live stream. So just click the alert notification and you can make sure you don't miss it. But yeah, I mean, kind of like looking at Milady and Pepe and Flocky. We've got a Pepe analysis that's just dropped as well, so you can check that out. Probably doing a Flocky one at some point, probably tomorrow. But Milady was one of those, I think is going to be a sleeping giant, as much as it pains me. Like, there's no way that you can sit there and say that meme coins are just a passing phase. Of course, there's like 4 fucking million of them. There's a meme coin released for everything and a shitty token, whatever. But there are a few which do really, really catch. And whether they're kind of powered by these massive Telegram, Twitter groups, or They just happened to catch that lucky wave or piggyback off other ones, such as, let's face it, Shiba Inu was piggybacked onto Doge. Pepe, I'd probably say Floki was piggybacked onto that, and also probably this as well. But yeah, I mean, you can't ignore them. So we all know that Pepe is probably here to stay. It's massive now, isn't it? I think is it 600? No, that's Sui. I think Pepe is like 70 million. Let's take a quick look at what size market cap Pepe is. So Pepe is, yeah, I was right, 600 million. I've just been looking at various different coins today. So that is mental, right? At the moment, Milady, or Ladies token is currently 70 million. So no, I'm not saying that it will kind of like fly up to 600 million, which is 10x, but it could get halfway there. But for the most part, like, we don't have a lot of kind of analysis to go on right now. I kind of like to do analysis based on exchanges. When analysis kind of is only really useful when it's in a kind of a tradable environment. So, until it kind of lands on like some of your more active exchanges and stuff like that, then analysis starts to become a little bit more impactful, if you will, because analysis at the end of the day, guys, is psychology. We should all know that. We should all remember that, that just because you draw a line on a chart, it doesn't mean that that has any actual quantifiable impact. It doesn't. It just has to make sure that enough people believe that that is a resistance or a support for it to happen. And that's why it accumulates lots of buys and sells there, and thus ultimately price action occurs. So just remember that. So until we kind of have a little bit more time on in these habitats, then it kind of becomes a bit of a redundant exercise. But you can start as early as now. It's only been listed since the 11th of May, which is 6 days. So it's still under a week on Bybit at the moment. It's a big exchange, It's, that's no small cookie. But yeah, I mean, where we are at the moment, we're actually in what looks like a bit of a range. And the reason why I wanted to touch on this coin is because I had a look at Sui earlier, and again, it's a similar kind of thing. It lost its kind of key support. Now it's in a bit of a range, and the lower side of the range is like 9%, nothing to really kind of write home about. But for me, I think like Milady I think this has got quite a nice bit of potential to it. In the, as you can see here, down to this kind of key support just here, we sat at around about 460. We've got about a 43% drop, and it's quite easy to spot this, to be honest, because if we break this little trend line here and retest it, there's a pretty good chance that we're going to head down about 40%, which is a big old move. And also, I think there is a very, very good chance that we're going to bounce here, because we've seen a real nice kind of like double bottom. And this, what I love about this so much is because as soon as like an asset comes onto an exchange, I mean, usually it just gets dumped to fuck. Like, it just drops and it keeps going, and it takes a little while for it to find a nice local bottom, whereas this found a local bottom pretty quickly. Not only that, but it kind of double bottomed there, and then it's had a real nice steady rise, and it's immediately following some quite nice standardized technical analysis in this broadening wedge, rejection at around kind of like the opening key support. Let's ignore this ridiculous wick. But this opening key resistance, and then we had a double top, broke the resistance, dumped down nicely, and yet again, we're kind of heading on down. So even if we were to extend this trend line just here, we start to see, okay, we've got a bit of price action here, we've got a bit of price action here, we've broken that back into here, double top again. Are we going to head down? So we're right at this kind of crux of, if we break this trend line, then yeah, I think we could head on down. A nice little 43% short on 43% short on Milady. I need to start calling it Ladies. When I first looked at this token, and just because of crypto how it is, I just looked at it, I was like, yes, classic Lattice. It's just like, why did I call it that? Why don't I just call it Ladies? Like, literally anybody on the planet would. But yeah, so Lattice, Milady meme coin, I think it's going to go 43% drop. This is where it gets exciting though. So if we just move some of this text, check this out. So once we head on down here, like if we were to head up, okay, so the other scenario, let's have a look at the other scenario first before we look at the actual moonshot. If we break above this local resistance, as we can see, this is quite significant here. I mean, we could even, if we stretch this back here, we see that it's kind of lining up with this rejection here and down again and so on. So we see that this is significant. It's literally the middle of the range. So we've got this real nice pivotal support resistance, which we're on the wrong side of if you're a bull, right side of if you're a bear. But if we do get back above that, then that's going to show something quite significant in that, it's kind of diverting away from this kind of real nice wave kind of pattern of just hitting top, bottom, top, bottom. You know, this has gone top and it's been rejected from middle. So that being said, you know, we could end up heading and testing the upper range again. And then, like I said, what's quite significant about that, it starts to create this ascending triangle pattern where we just maintain testing the top until we eventually break and we pump up. So that's kind of what I'd expect if we break this. So we are at quite a pivotal point. Now, the reality is, it looks like a small move, but I can already tell you that that small move up, it's just on the 1 hour time frame, bear in mind, is 20%. Because, yeah, we are at those points, we are at those price points now where every single little pip does have quite a big impact. So, yeah, like I said, if we drop down, big move. If we get up there, yeah, it's still a nice, like, 46% move up. Although not as exciting, because I do feel we'll range for there. But if we do head on down and test this lower range, you can actually do a pretty concise trade here. Be a bit of a trading ninja. And you can be pretty cool with your risk reward, because I've got a pretty good feeling if we lose that, we are going to can it down. But for me, that would be a pretty obvious trade, something crazy like that. You can, yeah, that's literally looking at that right. It's a 10, 11 risk reward. It's not the kind of trade that I do. Like I said, I do a lot of scalping mainly, few swing trades here and there, mainly just for a bit of fun. But it is a potential setup you can look at. So you can trade this both ways, 46%. I mean, if you want, you can be a bit more liberal with it. You can lower that to 46, so you can actually short it down, take 44%, let's say, take your profit, then use that profit as your stop loss. So you've got a break-even trade here with a potential upside of 237%. Or yeah, like I said, you can pretty much short it down half that. So at least no matter what happens, if you hit stop loss here, you've still made, let's say, 22% from that entire trade. Again, it's just a complete net win. But that's the way I'd be playing it. And then if it does obviously smash it completely down, then this is a whole new market structure once it breaks this range. And then that's when you have to reassess the analysis. Just something to bear in mind. But there are a few other things. So been getting a lot more into trending tokens at the moment. We have some 1 p.m. alerts, which we'll take a look at shortly and see what swing trades are on the target. But also want to take a look at something else that we've got coming up. So for me right now, some assets that you really want to be looking at is obviously Pepe, Hello Token, CRV, Phil, Carver, Yo, Esky, GPT, Ladies, Sui, and Arb. Kind of, these are all the hot tokens right now. They're all the ones that everyone's talking about, which is half the battle, let's face it, with crypto. But some of you've got to be a little bit reactive with those ones, and they're very volatile. So often with these kind of things, it does benefit you if you're going into them with a DCA structure or a real big old stop loss or a hodl mentality. Which is, I don't mind trading fundamentals and news and stuff like that. But again, it's just so unpredictable. But the upside sometimes is actually quite big. So there are a couple of assets that I do want to take a look at. One is LTC. For me, this is the sleeping giant amongst them all. I think we'll probably might take a longer term setup. reason being, quite simply, is we've got a few things actually. It's not actually just as simple as the block halving. But on the 5th of August, we've got the good old block halving, which is kind of the big driver behind the current excitement and price. As you can see, look at that massive move. Boosh. And the market's not exactly doing fantastic at the moment, and LTC is. Loading a bit slow. I want to get some information up for you, but it is loading very, very slow. Maybe if I close one of these 4,000 screens down. There we go. So if you're not doing it already, guys, remember that with trading, always try to use a risk-based approach. A lot of people I still see going into trades with a fixed investment and stop losses that are all over the place. You know, it's just like, oh, I only trade $100 per trade. That's fine. But you know, if you've got one trade which is 5% stop loss, one trade which is 50% stop loss, it just completely throws your strategy entirely out the window, makes it completely pointless. The only way you can do a fixed investment, or should do a fixed investment strategy per trade realistically, is if you have a fixed stop loss. So if you're trading 5% stop loss for every trade, then sure, by all means use a fixed investment. But the moment your stop loss changes, that's when it throws all of your actual strategy out of kilt. So it makes it very, very hard to adjust, which is why dynamic stop losses and take profits are super duper tricky to kind of back test. You know, sure, you can back test them, that's fine, but they start to become very, very variable. And yeah, it's one of the main reasons why we don't actually use kind of dynamic stop losses and take profits for our automated systems, is mainly because there is always some scenario which can absolutely wreck you. And not to mention the lag that happens. Like in a perfect world, as we see it on TradingView, let's say if it crosses or has to close below a moving average, and then that's your stop loss. What happens if that one candle that is a close is 50%? Then your trade is 50% down instead of 1% down. Or let's say that it sends a signal, but it gets delayed. Then the next candle is a rapid 12% drop. Then you're an additional 12% down. Whereas with a fixed stop loss and take profit, whilst they're not, you don't have 0% slippage ever, even on the exchange. But at least it makes it as accurate as possible. So one of the reasons that we like to kind of use that. So straight up, we've got the Litecoin block halving. And let's get this little fella up. So in 77 days, 11 hours, 59 minutes, and 46 seconds from now, we've got a halving. And what is a block halving event? As part of Litecoin's coin issuance, miners are rewarded a certain amount of Litecoin whenever a block is produced approximately every 2.5 minutes. When Litecoin first started, 50 Litecoins per block were given as a reward to miners. After every 840,000 blocks are mined, approximately every 4 years, the block reward halves and will keep halving until the block reward per block becomes 0, approximately the year 2142. As of now, the block reward is 12.5 coins per block, and it will decrease to 6.25 coins per block. So very, very similarly to the Bitcoin halving, it just kind of increases the value, I guess, perceived value of new Litecoin blocks. So it makes the Litecoin blocks that you have now more valuable and more desirable, and thus more excitement to want to get into the Litecoin market. So yeah, not a bad thing. So we have it coming on the 5th of August, or thereabouts kind of thing. I think, not sure if you can put an exact date on it. Obviously, that's going to be a pretty dynamic countdown clock, but as it stands right now, it's the 5th of August. So if we were to put that in, and let's get some scalability of where this price might be going. So if in doubt, zoom out. Let's pop it on the 1 day. Get rid of some of these bars. And what I love about this one is, let's go back to the previous or approximate previous block halving, which should have been 1,460. So should be around about 1,460. Okay, there we go. So around about there-ish would have been the previous block halving. Maybe it has it on that. So as you can see, this is kind of like the actual run-up to it. 336%, and the actual official block halving was 200 days away within 77 days. So we're not quite on the same trajectory as we was, but not doing ever so bad. I mean, if we go back 200 days from where we are expecting the halving, and then we saw pretty much a peak. And how many days was this before the actual peak itself? Around about a month before. So we're getting mighty close to where we should be expecting a bit of a peak based purely on this last, on the only other halving that I can see here. So yeah, I mean, this is basically the distance that we can go. This is how much distance we have. We've got around about 46 days until we should be reaching a peak based on the previous halving. And all in all, like from an actual analysis point of view, it is looking easily one of the most bullish assets out there with how it's moving. It's not been overextended. What is exciting is that we're breaking this 200 daily exponential moving average. I always put a lot of faith in that because when we break it, or when we lose it, should I say, or when we bounce off it, it just usually rings true. Like, we always see some kind of price action as it nears it, whether it's kind of like haltering and then breaking, or bouncing, or breaking straight through. We never kind of just rattle around it, to be honest. It's always kind of quite significant. As you can see, it's like I said, it very rarely just ranges with it, just kind of sat in the middle of the 200 EMA. We always see something going on around it. So what we are expecting here is, like I said, we've broken it. We're testing it. If we hold it here, I have full faith that we're going to head on up. And, you know, kind of targets that we're looking at, given the time frame of the actual block halving. Again, a lot of this is based around the block halving, not going to lie. Probably wouldn't be jumping in on a trade on this one if that wasn't the case. I mean, realistically, since a lot of stuff's done about, you know, near 80% since, well, I suppose Bitcoin's done 80% since the turn of the year. This started way before. And I assume that this has a lot to do with, you know, the halving on the horizon. That's done about 95% since some of its lows. Currently, if you did an excellent buy just there, you'd be 65%, 70% up at this point. But like I said, you know, the big thing that I'm looking at the moment is this breaking of the moving averages, the turning of that, not only the 200, but the 50 and the 20. It's looking real nice like. So yeah, you know, we are definitely going to see some resistance around about this kind of point here, and this is kind of a very significant one. Hey, where's my ray? Very significant one, as you can see. Price point bounce, rattle, break, big down, then rejection, rejection, rejection. So for me, this is what I'm going to have my eyes on the most. And we're creating a pretty obvious ascending triangle right there. See if there's anything else tickling our fancy. Nah, nothing much. So it's broadening wedge. That's kind of quite good. So we can be expecting to land somewhere in and around this area, which takes us to around about 30 days before the halving, which is where we saw the previous peak. So I do feel you can be pretty aggressive with your stop loss here. By aggressive, you know, we are on the daily, so I'm guessing that's going to be about 10, 12, 15% or something, 18. And you can start looking at taking profit. So you can look at like about a 2-to-1 trade, I think relatively conservatively from here. The big factor here is basically getting past this 99.2. I mean, I should really have checked that straight away. I mean, that's the 100 resistance. So massive psychological resistance right there at the $100. So if we can break through that, super easy to pump on up. Now, there is absolutely nothing to say that we can't start to challenge these upper resistances. The only thing that I would say right now, obviously, is whatever Bitcoin's doing. We've got a pretty horrendous week for us from now until, especially Friday. We've got the Bitcoin conference that's going on, which just always brings a dump. Like, how many dumps did it have? Oh, he's got his headphones on. So yeah, he did some analysis that he put out. We'll see if we can find it in the channels. Yeah, pretty much every single Bitcoin conference I think was like about 20% drop or something like that. Let's have a look in the analysis. Here we go. So with the famous Miami conference starting on Thursday, so we're kicking off on that tomorrow, so we're going to start getting the dumpage on the way. I'd check my feeling. I wanted to check his feeling that every time this event goes ahead, we see a massive price correction, and yes, it was correct. Can we zoom this out a little bit? So yeah, you guys can see this chart. Bitcoin conference comes on and we see a massive 20% drop there, a 14% drop there. And then 2023, we're just kind of starting that drop. So back in 2021, following the COVID hiatus, the Bitcoin 2021 event crashed price by 20% as Saylor, Jack Dorsey, Tony Hawk, and Senator Ron Paul presented. In 2022, Peter Thiel, Jack Mallers, Pomp, Cathie Wood, and Odell Beckham Jr. only managed to correct by 13%. So, in essence, yeah, probably get your shorts ready. This would probably ring true for us to test the lower side of this trend line. Head on up. Can maybe be a little bit more aggressive with the stop loss, but I don't think there's any real need to be. Sitting around about 20%, I think is pretty safe, especially with a potential 40 to 60% upside. And then, yeah, I mean, the key with this one is it's basically ride till you die. And then once you start to see a significant rejection, sharp sell-off, that's really when you want to jump out if you're not working to a fixed take profit. So, yeah, Litecoin halving, a bit of a no-brainer. Something to consider to jump in on. We do also have my next favorite one that I wanted to take a look at was Atom. And Atom USDT, this is, as you can see, the massive difference between those two charts is Litecoin showing this real kind of pretty obvious ascending triangle, quite bullish, whereas Atom is not quite there yet. following a very similar kind of trajectory as to the, let's start down here. We know that they're going to line up, but how far will they line up? Not far. So yeah, it makes me a little bit nervous as we're looking at this. Just how we're kind of plateauing a bit on this support. So when I see these kind of things, I usually think we're gonna lose it. To be honest, it's not exactly filling me with much confidence in this range. We can even go as far as to add another. No, we don't need to do that. Just remove that one. So yes, that's where we're at. I mean, this is a little bit of a bullish one. What we do need to do is obviously break out of this downward trend line. So we're getting to the business end of the deal for Atom. We are on the daily, so still about a week away from confirmation. If we break below, I think I've been a bit too generous with this support. Pop it down here. If we do break below 10.266 on Atom, that's a bit of a double whammy for me because we've broken down on this trend line and we've also broken down on a key support. So losing this little support just here would definitely see probably a further move down to at least around about this region where we start to see a bit more price action heading all the way back to here. And yeah, I mean, that's like a good old 16% move down. However, on the flip side, if we can break above this trend line just hither, then I do feel that we've got a little bit more upside potential back to the top of this, I guess, range in a way, kind of the top side of the ascending triangle, which would give us a nice, pretty healthy 36%. But that's not exactly why I am looking at Atom at the moment. Why I'm looking at Atom at the moment is actually because we've got three pretty big releases on the horizon. We've got the Rho upgrade, RHO, the Epsilon release, and the Gamma release. So the Rho upgrade and the Epsilon release are happening apparently in Q2 2023. So we don't have a huge amount of time left for Q2, so it's going to be dropping at some point soon. So yeah, I mean, we've got like 6 weeks-ish until that kind of takes off. So I still think there's plenty of time to not be on the wrong side of this. I do think there'll be a bit more hype build up to it. We're in a quite nice little pattern, I'd say, but we do need to get above this. So if we can start getting some big old marketing coming out around the Rho upgrade, then that would be great. That'd be great. And then that gives us enough kind of bolster to get above this trend line and head on up. But we are at the mercy of Bitcoin right now. So let's hope that this conference and also Powell talking on Friday with Yellen, I believe, doesn't completely tank the market. Have a quick recap on the old Fed calendar, to give you an idea of what's coming up. And yeah, it's not the worst. Friday's the worst. I know that's going to be pretty bad. So we do have the significant things. We've got a very nice kind of nothing day today. We've got the Bitcoin conference kicking off tomorrow. So that's why I think a bit of a dump starting to happen. People aren't going to be ignorant to that. Tomorrow we do have the US unemployment claims. Not hugely impactful. The retail sales didn't really have a great deal of impact, to be quite honest. I mean, that, in all fairness, was quite a bullish, some quite bullish data in that we were looking for less than forecast, and we got 0.4 in, which is 0.4% less than 0.8. I'm sure you can do maths. Yeah, tomorrow we got the unemployment claims. I don't feel that's going to have really any impact at all. I think actually the Bitcoin conference is going to have more of an impact. Then it starts to get a bit spicy. The following day, we've got G7 meetings. Now, it's Friday, Saturday. Does that run into Sunday? Yeah, and Sunday as well. Anything can happen there. So it's worth keeping an eye on. It's going to be very broad, and it could relate to crypto, could mention crypto. It might just not at all. But given the fucking state of finances and stuff right now, and economy, and what the moves like the UK are doing, the US are doing, who knows? I don't know. It could have a bit of an impact. But what will definitely have an impact, and we know, sorry, not Yellen, Loomis, Senator Loomis will speak, is definitely Fed Chair Powell speaking. And yeah, I mean, every time he talks, it just causes absolute chaos in the market because 9 times out of 10, something he says is misconstrued or given a lot more impact than it actually has. And then later on, it's kind of almost retracted in a way or given more clarity, and yeah, it doesn't really help anything. So what I'm saying, long story short, just be a little bit wary at 3:30 p.m., 4 p.m. UTC +1. Make sure you've got it linked up to whatever your time is. Very easy mistake to make. That there is a bit of volatility. So things like scalps and stuff like that will get obliterated. We've had a few on the live stream before where we've gone into this data, and so far they've actually all worked out well. But they are very 50-50. You will almost definitely hit a stop loss or take profit. Exciting, but unnecessary. Then we've got, the full 3 days of the Bitcoin conference where anything can happen, anything can be announced. We could see like hedge funds getting involved and like making big announcements. But again, a lot of stuff going on. G7 meetings, Bitcoin conference, Powell speaking, Loomis speaking. So yeah, strap in. I think the next few days is going to get a bit spicy. So yeah, watch out. But anyway, back to Atom, Cosmos, great asset. And we've got the, where are you? Row upgrade expected. It was actually expected in the paper in Q1 2023. It was then updated to Q2, which is where we are at now. So there is a small chance that could have been a purposeful delay to wait for a little bit until we start to see a little bit more strength in the market. So the same could roll on, but I guess there's only so long that they can hold this off for. But yeah, it's not a small upgrade, it's a big upgrade. Usually with all these upgrades, I don't look into the absolute finite details of them because it takes a lot of time, and you just kind of need to understand what is the actual importance from both a consumer perspective, but what is the actual impact? Will this create new roads for people to the assets or not? So they're the things to kind of be mindful of. Understanding the exact kind of spending hours and hours and hours reading into it is never a bad thing, but there's a lot of assets out there. So kind of use your time wisely, I guess is what I'm saying. You are allowed to be top line. You don't have to be super duper thorough about everything, but it doesn't hurt if you are. But yeah, like I said, I base a lot of what I'm doing on general kind of consumer sentiment, and reality is like, where are these releases, these announcements, where are they ranking in the general popularity? Like, how many people are actually kind of mindful and concerned of them, which gives a good understanding and indicator of, is this actually going to have any impact? Are we actually going to see actual market movement? Sure, it might be great for the wider crypto kind of ecosystem, and it may be an amazing upgrade, awesome, but does it actually move the price? Might not, might. So you've got to kind of follow the crowd a little bit in what are people kind of caring about, what are people actually going to invest in. And for me, this is one of them. I think this upgrade is going to have a good impact. So here's the kind of, the two areas to be looking at, guys. If we do drop below this trend line, I do think we can drop back to the bottom of the range at around about $8.64. And equally, if we break out this trend line, then that puts us on path to get to around about $15.88. But realistically, I'd say about $15 to be safe before any significant rejection, especially if we are on this kind of slow descending trend line there. So kind of getting out around about this region would be a good shout. What else do we want to have a look at today? wallets, crypto wallets. I think let's go with ZEN. So ZEN is another one. Whenever I see the word mainnet, in any context, that's usually a pretty good thing. And that more often than not will move the price in a very, very positive manner. So let's take a look at ZEN. Now this is dubbed for release in Q2 2023 yet again. So ZEN, if you don't know, is Horizon. And you would have seen, let's find out when that was actually announced. So that was put on the 3rd of February. And so yeah, no real surprise there. Price has gone cray-cray, pumped about 47% after the announcement. And then we've dumped back down. So now we're actually at the business end of the deal. And I mean, if I'm being honest, like, you couldn't really be hoping for a better price to be getting it. We haven't, I wouldn't say we've lost support. I'd say we're definitely on support. Luckily, we are not, I hope we're not. We're not one of these little fellas up here that kind of got into the party a little bit late. I mean, Jesus, that is late. Look at that. So announcement, 3rd of Feb. I mean, you could have time to hear about that. Head to the shops, buy some tea bags, get a bit of sugar and milk, head on back home, put the kettle on, wait a couple of days for it, a lovely cup of tea, go back to your computer and buy, and yet you'd still be 40% up. So, yeah, unlucky guys, but it is what it is. I mean, that's a nasty drop as well, 43%. Yeah, I mean, naturally, no surprise here. We see massive volume coming in after the announcement, and then we've got diminishing volume. Nothing terribly exciting, but like I said, we've got the actual mainnet kicking off. You know, I can only really say Q2 2023. The roadmap. Where are you? Yeah, it's all about Eon. Eon for the next quarter and a half. Horizon ecosystems. All very exciting stuff. But yeah, check out the roadmap for 2023 on Horizon. A lot more information there. But again, like I said, we're not looking at the exact things that are going on. We're just looking at some of the big tells. For me, one of the big tells are things like testnets, mainnets, airdrops. Listings is a bit risky to play because so many people know about them before. Like, it's just painful. So many people know about them before you or me ever will. And they're already in. They're already got their finger on the sell button as soon as it goes on to any Binance exchange. Coinbase, I think, is the worst. You know, if it gets listed on Coinbase, it just gets dumped instantly, which is a bit of a shame, but is what it is. So listings, don't tend to trade them too much. If you do happen to come across a listing ahead of time, in whichever way you may do, it could be some well-calculated detective work, or you know, you could know a guy. But yeah, for the most part, it's super risky because you have to be also like really kind of militant about your take profit. Where are you going to get out? Like, I would never recommend kind of trying to catch it, trying to hit the actual exit dynamically. I suppose you can, but it gets a bit hard because of slippage and liquidity. With the amount of transactions that are going on, it can cause, well, just unnecessary slippage. So if you get your kind of sell in there nice and early, then you know it puts you in a very strong place. But yeah, so we have quite a lot going on with Horizon in Q2 actually. So we've got the Eon mainnet, we've got Cobalt EVM compatibility, improved block explorer, Gobi testnet, another big tick, EVM sidechain experiment, permission sidechain. Then it does actually roll on into Q3 as well, because then we've got the Horizon 2.0 strategy and Horizon branded DApps. So yeah, so a lot going on, and this to me is always good news when we start to see some kind of big upgrades, big features, big releases, because then it's like half the battle. Like, what you're looking to do is you're looking to aim to outperform Bitcoin for the most part. Unfortunately, very rarely that these will actually go so heavily against the grain that it just decouples from what Bitcoin's doing. You'll see blips like this where everybody jumps on board, but then it does rewrite itself pretty quickly. What we're actually looking for is, the actual announcement. I know a lot of people say sell the news. For mainnets, I actually see them a little bit different. I do believe that you can actually jump on the hype with them. A lot of people do love to get involved. And historically, they're one of the few things that I do trade from a fundamental basis or a news release basis, whatever you want to call it. But at the same time, there are a few things that I do need to see when trading this kind of style. Just to give you a bit of a perspective of what's going on. Am I being stupid or something? Yes, I was being stupid. Yeah, no small order of what we've got in the pipeline for Horizon. Exciting. However, like I said, I do need to have a little bit more than that. And for me, that would be something like, I don't necessarily want a divergence here, if I'm being honest. I don't want the price to kind of sink down here quickly, unless it does only do it very quickly, and when I'm sleeping, I'm not paying attention. It can do it then. And so if it did do that, and it showed like a nice little divergence there, and divergence here, so it came down and bounced back up. That would be nice. I'd like that, and then that would actually be a bit of a trigger to buy. Sorry. Because we've kind of got the perfect scenario there lining up. We've got it being oversold, and this is the daily time frame as well, so it's something to be a little bit mindful of, that daily time frames, high time frames just in general have much higher conviction than lower time frames, simply because it's happening over a longer period of time. We do also have an untested weekly. Just saw another untested weekly up there. I do quite like the look of. I love weekly pivots. You can kind of see very much I don't have one singular strategy. I have lots of strategies that always merge into one. And what's quite good about that is it helps, like you've with the strategies that you do pick and your strategies that you do end up going with, it's quite important to make sure that you're using strategies that won't often conflict with each other. So that's why I use, patterns like support, resistance, trend lines, divergences, a little bit of oversold. So oversold for me is like bottom, like lower, very, very low tier. But it is good to be mindful of, because at the same time, whilst it doesn't have a tremendous amount of impact on my personal trading or decisions, it does have a massive impact on a lot of other people's decisions. So as I've always said, trading is psychology. So if a lot of people think it, there's a good chance it will happen. One of my favorite things, and you can use a RSI or a awesome oscillator, even like a standard kind of cumulative volume delta to mimic something like this. This is our custom one. Unfortunately, it's not available. It's kind of it's another one of our little magic bullets that we love. And we're not quite prepared to let her out of the cage just yet. But as you can see just here, I love these breakouts. And what I use for these ones, once it's kind of in a oversold, overbought territory, that for me is the new anchor point. And then I start to draw the trend lines from there. So as you can see here, we see a nice breakout and we pull. What's also good as well, it always gets you in like a little bit earlier than than your more conventional trend lines. So you get a nice little 15% from there. But this is the trend lines I really don't like to see. The really light, long, kind of almost flat ones, because the problem with these kind of trend lines is, since they're so flat, it's quite hard to determine what a breakout is. So more often than not, you're not actually, like with this one, this is obvious. This is super obvious. Like you've got a breakout there, big strong candle, almost oversold, booyah. Like you're going in on that kind of thing. No doubt about it. You've got a support there. But with these ones, it's a bit trickier because, like I said, how do you really define what a breakout is? I mean, so you could argue, let's take a look at this one here. I mean, yeah, to be fair, like if you'd have gone in on this trade, that would line up with this candle. And it wouldn't be amazing, wouldn't be crazy, but it'd still be 6% profit. So they're just so strong, so strong. So I do use these a lot of the time. I can also use this as like almost it's support and resistance in its own. So if I was to use these kind of points of support, my break point would be just here. So I'd jump in a trade. And like what I love about this indicator or using kind of oscillators in this manner is there's always an opportunity. It always gives you a perpetual gauge on the market. You always know what's going on. You can be in a pretty much a range in a consolidating period with no defined direction, but it tells you that. It lets you know, because you can see if you're a massive distance away from a trend line, support or resistance. And realistically, when it's like that, you know that you don't want to be making any kind of major decisions there because everything's so undecided. And I'll be honest, that's the worst time to trade, is when it's undecided, or when you think it might break a resistance or it might break a support or something like that, or it might hold a support. Maybe not hold a support. Holding a support is pretty good. But when you're approaching a resistance, unless you're in a defined range, then yeah, like I said, 9 times out of 10, you can get a pretty good idea of what the market's doing, as bleak as it looks sometimes. So to apply that logic to this, that's where we're at right now. Like we don't have a particularly defined range. So what we do have right here is a potential for a divergence oversold on a trend support with an untested weekly pivot. What we don't have is any kind of key break in support or resistance just yet. So with that in mind, I kind of want to be looking at something like breaking above this resistance support just here on the oscillator. Then I'm not going to pay too much attention. After all that, I'm not going to pay too much attention to this trend line because, like I said, it's a little bit flat. It takes a little while to confirm what the direction is. Whether it's a full-on break or just a fake out. But one thing I will be paying attention to is the actual trend line on here. I do think this is quite significant. And once we break out, then I think this is kind of going to be looking like the range that we're playing in. It's quite obvious price action going on here. And it's a massive range as well. So this is why I was kind of saying earlier on that you really couldn't be getting this price any better. And what's nice as well, if we lose this, yeah, I mean, we're pretty much shit out of luck. It's going to go down further. But we've held this support. Well, actually, technically, we've held this support for over, I'm not going to say 3 years. I'd say about 2 years and 5 months. 2.5 years we've held this support right here. If I was to draw a ray line on, as you can see, it's done pretty well. And even before then, it's kind of, that's where it started at. It's broken down. So price for ZEN right now is about as good as it can get. And realistically, I mean, you can place, you could take a punt at it with 10%, but we also might see a bit of a dip down prior, depending on what Bitcoin does in the next week or so. If we see a massive flash crash, flash dump, which I do think is very possible. We're currently at 26,700. I do think we could see 25 at some point in the pretty near future, but I don't think for very long. And I am pretty bullish mid to long term on Bitcoin. But I do think, like I said, a sharp correction is pretty inevitable. So which would hopefully maybe bring our little divergence here to light. And If we get to this weekly pivot, it should be good. It'll also mean we'll probably break this trend line. And if we do that, we've got a pretty obvious target. So, you know, you got some huge upside of 80% here. And I don't think there's going to be like a massive time frame around that, maybe 1-2 months or something. But again, potentially 6 weeks, because we got the mainnet news drop in. So that could absolutely blast up. Pretty speculative trade, not going to lie. Like I said, we don't really put out trades at all around news and fundamentals into the channel as premium trades. Like I said, because it is predicated a lot on potentials and ifs. But what is good about these kind of trades is the upside to them is usually really good. So it can be worth the risk. It's not really, we don't really see the necessity in our side. But you know, if you're watching this video and you are in the premium, then feel free to enter by all means. You can kind of see where the targets are. You understand what the logic is behind it. You can even track the upgrades and mainnets yourself, but you could be looking at around about 7 to 8 risk reward on that one, which is not a bad day's work if it works out. And then what else we got going on? I think I'll take a look at one more asset, which we could be looking at trading. And I am between. LDO has been going cray-cray at the moment. But let's have a look at ICX. Or did we not? ARPA. So we've got another mainnet launch with ARPA. And that is no additional information. Q2 23, 273 votes. That was put on the 13th of April. Let's take a little look at ARPA. Pretty much for these anyway, I'm going to be doing some in-depth analysis. I'll be launching in their own independent videos. I'm guessing April was... Where is April? Ugh. $2023. Let's try not going back all the fucking way. There we go. 13th. So the reason why I'm doing this is to find out when it was actually announced, what impact it had. Yeah, that's an ugly drop off. Right, so we pumped for 5 days, 7%, and then dumped quite heavily. And then all the serious buyers got on board. So yeah, what's good about doing this and just doing a quick check to when it was released, like the actual news itself was announced, it gives a really, really clear understanding as to how many people are actually looking at this, what impact does this have, what impact may it have down the future, or is there going to be a pretty ugly sell-off? Let's see if we can find out some more info on this one. Yeah, very, very little information on that. There must be some more. Oh, there we go. So the last upgrade was in Q1 2023 for the testnet release bug bounty. So at the start of the year, it was pretty hard to... let's see what kind of impact that had past. Telegram, testnet, surely there must be a testnet, no. Okay. So with these ones as well, guys, if you've got your eyes on any kind of mainnet launches that are happening in a quarter, like Q2, Q3, Q4, whatever, then that might be a good time to start following AMAs, whether they do on Telegram or Twitter Spaces, and stuff like that, because 9 times out of 10, they'll give you a bit of a clear indication when it might, or what stage they're at. So you can be a bit more accurate with your buys and, or, you know, add more to the booty. But ARPA's looking all right at the moment, to be honest. ARPA, fun to say. I mean, look at the state of these wicks. only seem to be up, which is nice. Natural bottom. Oh, yeah, very nice support there. I'm picking that as my range. Heavy rejection from there. So this is quite encouraging, actually. I do think ARPA's a go. So we've got 6 weeks left of Q2. It's never a guarantee it's going to be released, but we've got this upward trajectory. Not seeing any distinct bad divergences yet. Apart from this one, which is, I think, a bit of an outlier. So this is technically a bearish divergence. But again, I think we can all testify that this is a bit of a ridiculous wick. So that was the testnet announcement. But also at the same time, this was kind of when Bitcoin started to get his shit together. So a bit tough to kind of isolate that was more news-based. However, definitely, I think this is all mainnet based. What am I doing? This way around. Yeah, this little section that we're in right now is definitely driven by mainnet's FOMO. And of course, you've got to you've got to consider that with these launches, with these releases and stuff like that, there are actual real life investors investing in the project because they have they don't have a black heart like all of us degens. They actually want to see the project go well and not just make a quick buck off it. Why is chat disabled? Yeah, like I said, I think ARPA is a go, and you should definitely be considering it. Yeah, it is public. Why are you disabled, Mr. Chat? Give me 2 seconds.
Welcome to Block Party Trading.
Okay, sorry, a few little technical hiccup there, but not the end of the world. So where we're at basically with ARPA is it's looking pretty good, to be honest. I do think we are setting up for a bit of a fallback down to this trend line, maybe wrestle around here, and then shutting. Very, very kind of loose trajectory there, but we'll have a look at some more refined targets as to where we're going to go. Now, naturally, this is a pretty key one because that rejection is so aggressive. I do think not only at the top there, but pretty much you've got to be a bit cautious that a good way down here is going to be a lot of missed trades, a lot of people looking to sell who don't have maybe as much faith in the project, or maybe just wanted to have like kind of a quick buck or whatever. So it lines up quite nicely all the way back to here. So yeah, so be a little bit cautious around this section. Once we see a bit of a breakout, we might start to see the price waver a little bit. But a good kind of place to start, looking at potential entry is around about this little section down here. Once we start to approach this upward trend line, It's looking pretty good. Some insane volume coming in comparatively for this. But what we do have, yeah, that was an obvious breakout. One thing to be a little bit conscious of is on the flip side, if we start to break down here. Now, actually looking on the more bearish side, if we do lose this trend line, then there is a potential we can head on back down to the bottom of this range, which is sat at 2488. And equally, that should be pretty easy to spot if we break on down on this CVD trend line. And then realistically, that'll take us pretty much back down to the oversold territory. I think, you know, what is quite interesting is ARPA doesn't go crazy oversold that much on the daily, and it is oversold is not something I use as a reliable indicator for most things, but for certain assets it can be pretty good. It's easier to use it for oversold than it is for, again, you can probably just throw in an RSI to mimic something similar here, but it is a bit easier to use it for oversold than it is for overbought, because as we see with crypto, price goes pretty parabolic, more than it goes or just straight down forever. So yeah, so I definitely wouldn't necessarily rely or put my house on using overbought for shorts, but oversold is pretty good. As we can see here in a pretty lengthy history on ARPA, that when things go oversold, don't immediately go straight back up, but they don't go a huge amount further. I guess that's quite a big drop, 47%. But yeah, I mean, they can be pretty strong. So keep an eye on that. Like if we do break down here, then I'd use something like being oversold, push the RSI down to like 25, not just 30, down to 25 is a bit of a better place to be using it. Gives real kind of like confirmed oversold, overbought territory if you are using that for trading. Naturally as well, look for the divergences if and where you can. They are just super king. Yes, we do actually technically have a divergence here, but again, I'm not using putting too much faith into this crazy wick. So yeah, so not surprised that's heading down. So I do think we might see some down. Is it worth shorting it on the way down? I think it's a bit of a, not necessarily a necessary play, to be honest. The upside's pretty good. What about, we're looking at this potential last local support, which is where we're at right now. If Bitcoin conference kind of drives it down, then this is kind of where we're looking in this region. And what's quite nice as well, we're going to have the 200 EMA coming right in for some nice support there. Probably won't go up that fast, but yeah, that is looking pretty nice. So like I said, somewhere around this region is where you might be wanting to look for an entry if you are going to go in on this trade. We've got some nice fundamental news in the main net backing it up. This would be an aggressive stop loss around about 13%, which I think is probably fine, to be honest, because if we do lose this trend line, the 200 EMA, the CVD trend line, then I think that feels like there'll be something bigger at play. Then looking to take profit probably around about this peak here, just before we start getting into this territory here, where I do feel there's going to be a lot of sells just for people breaking even, getting out of that pretty obvious pump and dump, I'd say. Yeah, so it's a pretty nice sort of 44% if we get the price heading down a little bit more. And then it's still 1.15, 1.2 you could get it to right now. And with the 28% upside with a potential for further up to 41%. But again, like I said, I think it's just going to start to get a bit risky around this. And the trade-off for, let's say at the better end of the scale down here, let's say we take 44%, I'd say pretty safely, and then versus 58% for an extra 14%, I don't really think it's worth the risk to push it that much further, but hey, it's your money. I mean, what you can do is basically be a little bit agile with updating your stop loss, making sure you're moving up the trade into profit constantly, and It's always a smart thing to do. But don't be too aggressive though. Like more often than not, moving your stop loss up aggressively doesn't actually save you money. It actually costs you quite a lot of money. And whilst you don't feel like you're losing as much, what you are losing is this extra bit of profit, which in the long term is super important because, you know, your profit is there, your extra profit is there to outweigh your losses or to balance it in the long term. Because as much as you hate it, guys, losses are a huge part of trading. So you just got to accept them, got to eat them up, yum, yum, yum. They're going to be there. They're always going to be there. Anyway, guys, so you've got 3 assets. Remember, we have had a look at Ladis, which is an interesting meme token. I think it has massive upside potential. We're basing this a lot on the market cap, a lot on the current trending ass side of it. We've got LTC, which we've got the halving on the 5th of August. A bit of a no-brainer there, guys. Come on. All this coupled with the good old Bitcoin halving not too far away. So if all else fails, we've still got that. Of course, we had a look at Atom with the Row upgrade as well. Big asset, big upgrade. Going to be some big hype around that. Not a bad chart. And then finally, we got the ARPA mainnet dropping as well, Q2 sometime. And the chart's not looking too bad. So have a go on all of those. Remember that you can get access to the block party indicator anytime, 7 days free. You can practice with TradingView's paper trade accounts. And also, if you want to go baller, it is 50% off all annual subscriptions at the moment. And to be honest, forevermore, to be honest, until we have so many people subscribe to it that we are just rolling money, which will probably never happen. But hey, we can all dream. So make sure you get on board with all that. Please take a little bit of what I've said today into your daily trading and how you approach it. It is not any kind of secret. It's pretty standard approach to trading, but it's amazing how many people don't apply it. And it just little tweaks like that will make your trading so much less stressful, such as approaching with risk, such as being cognitive of supports and resistances, having a fixed strategy, etc., etc., etc. All of which you can get a massive hand with in our premium channels. So check those out. Anyway, guys, I'm going to call it a day on the stream there. Hope it was insightful. Hope it helped. If you liked it, give us a like and a subscribe. Hit the alert button if you don't want to miss them as they happen. We are going to be streaming every Wednesday at 1 p.m. UTC. Double check that. I think it's 1 p.m. UTC. And the schedule's on Twitch, and you can find all the schedules in our free channels anyway. But yeah, just once a week so we can accumulate lots of scalping data, show you it, and do some live trades, and do a lot more analysis like this as well. And of course, if you really love the content, then check out blockpartytrading.com, as you can see above in the banner, to find out all the information there.